Good day, friends. Welcome to the Fund Manager View at MK Investment Managers. My name is Preeti Bhargav, and today we have Kashyap Javeri with us, Fund Manager at EIML. Welcome, Kashyap.
Thank you so much, Preeti.
So, Kashyap, I have few questions for you. How do you view the markets currently, and how's your outlook for FY25? You've been bullish on Indian manufacturing. What is your outlook on the service sector?
So I think, Preeti, we continue to be quite bullish on Indian markets, and primarily that bullish view stems from our extremely bullish view on Indian economy. I think last about 7 or 8 years we have used in cleaning up everything that was not in order, whether it was financial services balance sheets, whether it was corporate balance sheets, whether it was the utilizations of capacities across the board post-COVID. I think we have been doing phenomenal job there. All the supply side reforms are done by now. Most likely, I think we have done 90% of our job that we were supposed to do on the supply side reform side. On the reform, so on the demand side, I think the recent RBI dividend which was given to the government of India, additional almost about 40 basis points of GDP stimulus that they have gotten from the RBI can be used to provide now demand side reforms. And as we push the demand side more, now given that the supply side is pretty much in order, we continue to remain very bullish on Indian economy and consequently very bullish on the Indian markets as such. On the services side, I think now, if you look at broader, BFSI is something that we now have started lacking quite a bit. In terms of services, IT is still not something that we are still going overboard at this point of time. But on the services side, though, until now and in future, we continue to remain extremely bullish more on the manufacturing side. I think services is something that we are now incrementally also getting bullish upon.
Okay. Do you see any deviation on the government policy or reform agenda given the gap in numbers in the aftermath of the election results?
It's now, it's given that they won with about 240 seats. We would have loved them to win with almost about a majority of 272 on their own. We have to take that in stride, right? And I think given that the allies that they have got now, which is JDU as well as TDP from Andhra Pradesh, both their allies are pro-growth. You have seen in the past that this whole 1995, I would say, coming up of this whole Cyberabad, which is India's IT hub, the very first IT hub that India had was done by Chandrababu Naidu of TDP. I think both the allies are pro-growth. We do believe that the CapEx story as well as the supply side reform story that Modi government started since 2014 will continue as we go forward. I think what will now happen is that with the additional money that they've got from the RBI, more demand side stimulus is also possible. Supply side reforms meeting demand side stimulus, I think we are in for a very good equity markets if you look at over next about 5-year period.
Great. So NV has had a good run since inception. Do you see the same steam going for FY25? What factors will make a difference?
So we just recently celebrated our 2nd year anniversary for
Congratulations.
NV. And so far the experience has been overwhelming. We have delivered returns of compounded annual growth rate returns of almost about 35% plus on the scheme, on the strategy, which has outperformed the benchmark by almost about 700 or 800 basis points since inception. I think going forward, we continue to like manufacturing as a sector a lot. I think India within manufacturing, not only for Indian consumption, but also for the global consumption in terms of exports market, has got yet a lot to do. In terms of our own consumption, I think there is a lot of leeway for us to shift a lot of these imports to domestic production. In terms of global markets, in a lot of places, China is leaving space for us. Europe is leaving space for us. Some of those industries are, for example, auto ancillary, pharmaceutical, chemicals. Some of these industries will continue to do really well as we go forward, not only from the domestic consumption point of view, but also from the exports point of view. Okay. As and when that happens, I think a lot of space also opens up for accelerating the capex cycle, which is already underway. That's also another sector where we believe India can make a difference, not only in terms of domestic capex, but also to supply equipments and a lot of machinery for capex which is happening otherwise all over the world. I think that's where I do believe that manufacturing from India can do a lot of difference, and we continue to bank on NV for our investors to capitalize on that.
Okay, great. So capital goods has the second largest share in your portfolio. Which trends do you foresee emerging in years to come?
We continue to, like I mentioned, these are the three particularly sectors where I think we will continue to be overweight. Auto ancillary, followed by capital goods, that followed by pharmaceuticals / chemicals, if you both put together. That followed by, I think a lot of money is there to be made in building materials. And when I say building materials, it includes everything got to do with real estate. Though we don't primarily, invest in companies which are directly into real estate, but on the real estate side, I think in terms of the markets which are for refurbishing, for replenishment and secondary market, I think a lot of money is still available to be made over there.
Okay.
Gradually what's opening up, and some of our recent investments also highlight that, we do believe that rural spending or rural consumption is changing towards positive on margins, in which case it's gonna impact FMCG markets also positively. We have recently built some positions in quasi FMCG or something which is connected to FMCG, not directly FMCG, but something which is connected to FMCG. I think now, given that rural spending is looking to change positively on the margins, that's one sector that one should keep looking at in terms of manufacturing.
Great. All right. And how do you see the current valuations in the market? Are there any pockets of growth in near term?
So we keep getting this question a lot of time from our clients. They are also equally baffled about this whole rally which has happened in broader indices, and they are also quite apprehensive of putting money at this kind of index levels. Having said that, our idea is to not look at index, because none of our funds actually hug index either in terms of the sectoral allocation or in terms of stock picking. Ours is a bottom-up stock picking style within small and mid-cap space. And I think despite the fact that broader market may look like having run up quite a bit, at certain points of time, you have some stocks in mind which at some point of time were not within your pricing discipline to buy them. But overall, the time correction as well as the price corrections in some of them keeps throwing up opportunity to invest in some of those names over a period of time. For example, in this whole bull market, which started probably, which continued from beginning of this calendar year until even today, we have been able to find at least 3 stocks in diverse sectors, which have been at not even 52-week low, but maybe even 104 weeks low, where things are changing on the positive side incrementally, and those stocks have not done anything meaningful in this whole 3-year rally, right? So they are at the same prices at which they were probably 3 years ago when we were coming out of the COVID cycle. And now things are changing on the positive side in some of these names. So we could actually identify 3 names in last 3 months where we could invest clients' money at decent valuations, much cheaper than what the market is quoting at, and with growth prospects which were better than the market, right? So as an investor or as a fund manager who has a fiduciary relationship with their client to invest in growth stories at the right price, our endeavor is that we continue to look for this, pockets of dichotomy, or you could say, the pockets of anomalies, where even in this market which has run up so significantly, there are stocks which are available at probably 52-week low, 104 weeks low, or even 3-year low, and where things are changing on the positive side. So we have picked up some of those names.
Okay. So before you go, a rapid fire round for you.
Sure.
So your views, bullish, bearish, or neutral? BFSI.
Bullish.
Infrastructure.
Bullish.
Technology.
Neutral.
Auto and auto ancillaries.
Bullish.
Cement.
Neutral.
Retail and consumer goods.
Neutral.
Real estate.
Bearish.
Specialty chemicals.
Bullish.
Capital goods.
Bullish.
Electricals.
Bullish.
Indeed, insightful
overall,
discussion.
We are quite bullish on the market. One sector which, though we liked a lot, but not as a part of my NV portfolio, which is BFSI. I think that's where we are now seeing on the private sector banking side a lot of valuations coming within tolerance level. I think that's where I think the things are opening up, as you go forward.
Great. So indeed, insightful views on today's interviews. Thank you, Kashyap, for being with us.
Thank you
Thank
so
you for
much.
watching, friends. Do join us again for more insightful information on investments, market and growth with MK Investment Managers. If you like the video, please click like. If you have any questions, please comment, and don't forget to share it with your friends and families to help them learn more about markets, investments with MK Investment Managers.